Hi guys, so we're going to do today IAS 7 statement of cash flows. Okay, why statement of cash flows? Why need of another statement along with your statement of financial position and statement of profit and loss? Well, think of it this way. Now, what is your statement and profit and loss? Statement of profit and loss giving you? Your statement of profit and loss is giving you the profit figure for the year, right? But when I say profit figure for the year, does that mean that profit figure, say for example, my P&L is showing a profit figure for the year of 50,000, right? 50,000. Say, let me punch this figure for you. Profits for the year at $50,000. Okay. Does this mean that my business had a cash inflow of 50,000? Does this mean that the net cash inflow? No, this doesn't mean. My P&L saying I made a profit of $50,000 does not mean that I did a net cash inflow of $50,000 also. Why? The big question mark is why, right? Well, think of it this way. What are you doing in your P&L? You're booking your revenue, you're booking your expenses. So revenue less the expenses gives you the profit for the year, right? Now, when do you book your revenue? Say for example, you have you're going to make sales of goods and everything, you have property at rent, all of these things. There are various ways in which you are generating revenue. One would be your main line of business from which you're generating revenue, right? That is probably, if you're a trader, then you're selling goods, and if you're a manufacturer, then you're converting raw materials, selling them this way, one of these ways. Okay, the point is, say for example, you have a property income, you have given that on rent, and rental income would come from that property. But now think of this, if your tenant for the year has not paid you rent, does that mean that you don't record your rental income in the P&L? No, it doesn't mean that. Even if your tenant didn't pay you, you will still record your rental income. Same way, if you have rented somebody else's property, you are using somebody else's property, and just because in a year you couldn't make a payment, doesn't mean you won't record a rental expense. You will still record a rental expense even if money didn't go out from your pocket. The reason is because P&L is made on accrual basis, right? P&L, the profit and loss, is made on accrual basis. That's why you book your revenue when you deserve to earn it, and you book your expenses when you incurred the expense. You don't wait for when the cash will go out from the pocket. You don't wait for when the cash will come in the business. All right. So that's why this profit figure 50,000 is not a cash profit. It's not a cash profit. Okay. But don't you think it's important for the business to know how much cash inflow it had? Yes, of course, it's super important. It's important that the business knows how much net cash inflow the business generated during the year, right? Most of you all, when I say this, could think of, okay, if it's important for the business to know its cash position, then you have your balance sheet in which you have your cash position already reflecting. In your current assets, you have your cash in bank, right? So if I have my balance sheet for 2016 and it's giving me a cash position of say 40,000, and then I have 2017 which is giving me the cash position at say 60,000. Yes, most of us can make an inference that okay, the net cash that the net cash inflow that the business did was of 20,000 in the year. From 40,000 it came to 60,000. That's because 20,000 was generated in the year, right? That's the only logical reason that there was cash inflow in the business. So I got the figure from there, right? But your balance sheet's cash position still is very limited. Still gives me very limited information. I still don't know where that 20,000 came from. I can't make a analysis whether my business is doing good on this basis that my business generated 20,000. Why? 20,000, my cash going up is definitely good. Why can't I make the statement that my business is doing good? Because this 20,000 could be cash inflow, could be because of any reason. It could also be because you have raised a loan, you have issued loan notes, you have borrowed money from somebody. That's why there is a 20,000 inflow. Or It's also because you're selling non-current assets. Now if you're selling non-current asset and because of that your cash position went up, it's not very healthy for the business. You can sell your non-current asset and survive up to a point. What after a point? Those non-current assets are involved in generating and making your finished goods. So what are you going to do after that? So it's very important to not just know that there is a net cash inflow or outflow, but it's also important to know how this figure of 40,000 came up to 60,000. What are the total cash inflows? What are the total cash outflows? How did I get the net figure of 20,000? I need to know the entire thing. I need to know whether my general business line is generating cash inflow or not. The users of the financial statements, the shareholders, the other important institutions, they need to know whether your general business line is healthy, whether it's able to generate cash or not. Because this way, just to show a healthy position, just to show inflated profits, good assets and everything, I can enter into fake contracts of receivables. I can enter into fake sales contract. I can book my profit, I can book my revenue. What happens when I do a sale? I book revenue, I deduct cost, I get my profit. So I can that way I can show extra revenue. I can enter into a fake contract with somebody. That person could be hand in glove with me, and inflated revenue, inflated profit. Okay, P&L is showing a very good position. Receivables are higher, balance sheet is showing very good. While I know that's a fake contract, I'm never going to get that profit. I'm never going to get that those debtors are never going to pay me that money. One fine point, I'll have to write off that. I'll have to write off the bad debts in my P&L, right? I'll have to make expenses because my debtors wouldn't be able to pay me. So I'll have to reflect that after a few years, after 2 years, after 1 year, whenever. So one year I'm showing a very healthy position, the other year I am not. So it's very important for the users of the financial statements to know that how much cash inflow is also coming. Increasing I'll come to that part later. But yeah, so what do you have then for your users? What do you have then for yourself to make such analysis, make such inference? You then have cash flows. You then have cash flows for this, because what cash flows would do is it will paint the picture that from 40,000 your cash position came to 60,000. What were the total cash inflows? Okay, what were the total cash inflows? How much came in the business? Okay, how much came in the business? How much went out from the business? And how much remains with the business in the year? How much net cash inflow remains in the year? Okay, cash flows will paint this picture right from the beginning of the year till the end of the year. From 40,000, how did it become 60,000? So that's why there is an obligation to also publish another